So this is a fixed cost. We can see that fixed cost is those which do not change with the level of activity within the relevant range. This cost will be incurred even if no products are produced, like rental of factory building and business license. For variable cost, it means that the total variable cost increase when more units are produced and decrease cost if less products are produced, like salesman commission and direct material cost. Mixed cost is something that we must still have to pay even though we didn't use it so much, like electric bill and water bill. Even though we didn't use it so much, but we still have to pay it at the end of the month. For more explanation for staff cost is when the depreciation of machinery will increase as the company purchase more new machines due to increase in the level of production volume. Thus, the depreciation expenses will increase too. That was meant by staff cost.
Traceability cost is a cost that is incurred because of the existence of a cost object. If the cost object had never existed, the traceability cost would have not been incurred. And if the cost object were eliminated, the traceability cost will disappear too. Example of traceability cost and cost object. Cost object for advertising is product, product line, or company. Meanwhile, liability insurance, the cost object is company or subsidiary, and rent, the cost object is product line, and lastly, the warehouse cost, the cost object is geographical area. But traceability cost has its limits. It only be associated with an intermediate level of cost object only.
The meaning of controllability is the costs that can be classified according to their controllability, means that those costs may or may not be influenced by the decision or action of manager. There are two types of controllability. First, controllable cost and non-controllable cost. The definition of the controllable cost is the cost that can be influenced and monitored by an authorized manager, for example, labor cost and overtime. For controllable costs, all decisions depends on manager. If the manager decreases the number of staff, the cost of labor will decrease. However, if the manager increases the number of staff, the cost of labor also increases. Definition of non-controllable cost is the cost that cannot be influenced and monitored by an authorized manager, for example, cost of raw materials and tax. For a non-controllable cost, the increasing or decreasing tax rates or fuel price does not depend on manager's decision, but it depends on a third party.
Normality. In general, we can also group costs according to their normality. Normality refers to those costs incurred for certain level of activities that may or may not have been planned. There are two types of normality costs. First, normal costs. Normal cost is the normal or regular costs which are incurred in the normal condition during the normal condition operation of the organization. They are the sum of actual direct material costs, actual labor costs, and other direct expense. For example, repair, maintenance, salaries paid to the employees. Next, abnormal costs. Abnormal costs is the costs which are unusual or irregular, which are not incurred due to abnormal situation of operations or production. For example, destruction due to fire, shutdown of machine, and lockout.